Okay, so for my tutorial, I'll be talking about the accounting cycle. I'm going to go over the very basic core definitions of what each part of the cycle is, so that if you were to ever run a small business in the future, you can learn how to do it. But this is not a tutorial of how, it's a tutorial of what. What is the accounting cycle? So you can just know a very basic knowledge of what it is accountants do through the entire process of working for a company. Some accountants use old school paper, which I'll be showing in this video, to record stuff. That's usually small businesses, but most large corporations actually end up using softwares on the computer. But for the purpose of this video, I will actually be using some pictures I took from a project of mine for my accounting class to show you the different steps of the accounting cycle. So the accounting cycle is basically the name that's given to the collective process of recording and processing the accounting events of the company. And this series of steps ends with the general journal. The general journal is the master journal that all company transactions or journal entries are recorded in. A typical journal has at least 5 columns, one for the date, the account titles such as cash, accounts payable, accounts receivable, the posting reference, which not everybody does, the debit and credit columns, which is positive or negative, basically. And then the general ledger is basically completely copying over the information from the journal into the ledger. The ledger are all separate accounts. As you can see on this picture, this is the cash account, and all this is recording each date for that month where we either received cash or paid cash. So it's real simple. It's literally taking your journal entries that you had for that month or that year and transferring directly, copying them over to a ledger to make it a little more organized for each section of your company. The next section is called a job cost sheet. The job cost sheet is basically what the workers are getting paid. It's a compilation of the actual costs of a job. It's typically formatted and distributed for consumption by the management team and basically to see if the job was correctly bid or worked. To basically see, like, are they getting paid more than they should be for the job they're doing? Like, basically, are they working too many hours and not getting enough production? Simple things like that. The next part of the cycle is the unadjusted/adjusted trial balances. This is basically a listing of all the account titles and balances contained in the general ledger after the adjusting entries for an accounting period have been posted to the accounts. So basically, once again, very simple. It's just posting what you did earlier in the general ledger and putting on a more formal official page. As you can see here, at the top it says cash, then below it accounts receivable, and so on and so forth. They're just different accounts. The total number at the very end, after you do all the debits and credits, the total number at the end. The next section of the accounting cycle is called costs of goods manufactured. It could also be called cost of goods completed, and it basically calculates the total value of inventory that was produced during the period and is ready for sale. So basically, it's the total amount of expenses incurred to turn a good into a finished good to be able to sell. So the total cost from the raw materials to create something all the way to where you end up selling it, the total cost and cost to make something. And you just record on a page such as this blank page right here. Next is the income statement. The income statement is a financial statement that reports a company's financial performance over a specific accounting period. It's basically a summary of how the business incurs its revenues and expenses through both operating and non-operating activities. So on this page, it is blank. Obviously, most of these are going to be blank from here on out because I've not finished the project. But for the income statement, you're basically just recording revenues and expenses. So basically, where did I earn money as a company, and then where did I pay money as a company? So you can kind of compare, did I pay more than I earned or earn more than I paid? And then you have the statement of retained earnings. This shows how a period's profits are divided between dividends for shareholders and retained earnings, which are kept on the balance sheet to accumulate under owners' equity. So retained earnings is typically, it's a statement that shows, okay, how much money do I have at the end of the month to carry over to the next month? On this page it says for the month ended January 31st. This basically at the end of it is going to have a total amount that says, okay, how much money do I have to work with for the next month? And if you're a large corporation, such as Apple, it's also going to show your dividends, which is what you pay out to investors and shareholders This is the statement that also tells you like how much money you're giving out to your investors. And finally, the post-closing trial balance. The post-closing trial balance is a list of permanent accounts and their balances after closing entries have been journalized and recorded into the accounting system. These accounts will be carried forward and become the opening balances for the next accounting period. So this is, once again, it's kind of just wrapping it all together at the very end. This is the balance sheet right here. You can see it's blank. But in those blank spaces, you'll pretty much be entering the final amounts for each account so that on the next month, you have a sheet of paper where instead of looking at all these cycles, you can just look at this one thing and say, okay, here's what I have to work with. And now that's all said and done, you may be saying, this is ridiculously boring. And it really is. I love accounting. I enjoy it. This is a goal of mine. This is the theme of my entire website. I want to be an accountant and basically go on and retire early after college. But some of you might be thinking this is a ridiculously boring tutorial. And it kind of is. It's really just giving definitions of what the accounting cycle is, because some of you may actually want to run a business someday. And so it's basically there to teach you just the very core basics of the actual cycle of accounting so that you can go out yourself and maybe learn more about it on how to do each specific part. And since what I'll be doing after college, it's kind of what I had to make this video on. I had to think of something for the theme of my website, and the best thing I could think of was the accounting cycle, because at its core basics of what I said in this video, it's really just talking about start to finish. What do accountants do on the job? They usually use softwares. I know this was paper here and it was boring to look at, but they use softwares to record all these things for a company so they can make decisions. And hope you enjoyed my tutorial, and see you later.